The start of the 2024 spring market was a flop. Womp, womp, womp. The sentiment was weaker than most people wanted, specifically the sellers, and now we have a 15-year low in sales. But prices are actually holding steady for now. So I'm going to be going through the latest stats that just came out in this video to give you kind of an explanation as to what's happening and my slightly concerned take on the spring market in 2024, being that it is a flop and my spidey senses were kind of going off a little bit after March break. So if you are concerned about whether you're making the right move for the real estate for yourself and your family in the GTA market in 2024, you could book a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and we're enjoying the content I'm putting out there. Do me a favor and like and subscribe. So the first set of spring stats are essentially out, and boy, oh boy, was it a stinker, right? So my gut feeling as I was monitoring the stats and kind of the transactions post-March break really wasn't that great. And now we got the numbers. Yeah, they really weren't that great. A lot of sellers were hoping for that spring bounce that we normally get, because spring market is the best market in the year. And while we got it, my gut feeling tells me we're heading back into like a weaker market. I would say weak, like borderline buyer's market, not like a very strong one like we saw last year in 2023, but a soft one. And let me tell you why. I think the market was trying to front run the rate cuts earlier this year in January and February. And at that time, the market was expecting 5 rate cuts in 2024. Now that we've had a couple months of economic data come out, the expectation of like the 5 rate cuts is now 3 rate cuts. And the idea of front running these rate cuts has stopped. And I suspect that we'll need to see actual rate cuts to spur the market back into what everyone thinks, the market should be or what they were expecting, right? Now, I want you to keep this little tidbit I just told you in mind as I go through these stats, because it's going to be kind of the underlying thought process that's going through my head so that you can understand it. And it'll give you a better look at why our spring market wasn't what it actually was. So you can see in this chart over here, the average price is up 1%, which is normal, right? In this chart, you can see it's a little bit above the historic average, but the 10-year average, which rules out some of the volatility in the last little bit, is actually 1.5. So by that metric, we're a little bit below the norm. Sales, new listings, and active listings are all up like they normally should be in spring, and they're all within that kind of what I would say the normal bound of spring increase that there's kind of nothing to see here. Everything balances itself. And this is why at the forefront, it looks like spring market is here, but it's not, right? And you'll see more as I dig deeper into the stats and show you the numbers and kind of my take on it and why my spidey senses were kind of going off earlier. And they still are kind of going off right now, that I think they're gonna be a bit like a weaker market. Now, prices for each segment is about the same, except for like the 4 and 6 detached, which is actually very normal to see a more sizable increase in the spring, because what happens is that the more expensive, call it 3 million plus homes, come on the market in spring. And when they do sell, they kind of pull the average up. The good thing here is that the months of inventory is holding quite steady, which tells me that yes, we have a softer market for spring and sales aren't great. The prices should be stable for now, right? And here's the thing, while I think months of inventory is holding steady, I think the buyer sentiment may not, right? Or it may not even increase as much as the amount of supply that I think is coming on the pipeline in the next few months of spring. This is because I'm not confident that all this new inventory that could be coming up in the next few months is going to get absorbed. And we're talking about whole months of spring inventory coming in April, not like half a month in March. So this is why I think the sentiment isn't great. And this is exactly why I think we're going to a softer spring market that people aren't expecting. Now let's look at the active listing history over here. Remember, last year in March, around this time, Silicon Valley Bank collapsed and it brought all the fixed rates down. So you could get at that time last year, like a 3-year fix for like as low as 4.25. Right now, you can get like a 3-year fix for like as low as 4.99. So that 4.25 rate drop from like the sixes was essentially what bailed out 2023 spring market. And I don't think we're getting that bailout this year to boost the sales in 2024. Meaning, if we look at the active listings here, you can see that we are gaining more listings than we had last year without that demand spurt. Now you can see this big spike in 2023 line is when we got that huge surge of listings, as a lot of sellers were like, uh-oh, rates aren't up, but I'm gonna wait for the fall market to list and hopefully get a better price. And a lot of people were doing that. And then so much inventory came out that it proceeded to stall. Then the listings all disappeared at the end of the year, not because they were sold, but most of them were terminated. Some of them went to the rental market because people didn't want a stale listing. So now those people could be holding out for spring. And this is why I think we're going to get a continued amount of new listing push into spring, into April, into May, as the demand isn't as strong as people are no longer front running the interest rate cuts this year. Will we get back up to that 15,000 active listings point where we may see some prices come down? We'll see. I will note here though, a lot of the inventory was condos, right? And some of it, I'd say a majority of it went to the rental space. And we'll have to see if the rental space can absorb it, right? So given the, coming population growth reduction, so like we're not seeing 1.2 million increase anymore, the Liberals are reducing the amount of like non-permanent residents. And we have the most amount of active listings in the rental space in a decade, as you can see in this chart. If these rental listings don't get absorbed or they can't rent at a number that's tolerable for the investors, I suspect they're going to go into the resale market as a more motivated seller to kind of clear it out. And this is before the whole shenanigans of like the assignment, some of these pre-cons that are coming up and whether they're going to appraise or not. So that's kind of my concern looking at the condo space right now. Now looking at the sales, you can see that we started the year very strong, stronger than most non-pandemic years, because remember, those are very weird, but it's effectively tapered off. The dotted white line is now below the 2023 purple line, and we're actually back to a 15-year low in sales in spring, dating all the way back to 2009, which was essentially the first spring after the great financial crisis. So keep that in mind. Not a good sign. But as I was saying, the amount of new listings hitting the market was actually normal, and it didn't move the months of inventory much. But like, remember what I was saying in the beginning, if we get that spike of inventory that disappeared at the end of 2023 from the high inventory 2023 fall market, I think we're going to be in some trouble, and it's going to start probably in the condo space. Now you can see here the purple line dipped below the white line last year. And that was from the Silicon Valley Bank collapse when the rates dropped that spurred the demand in the market. So we know we're probably not going to be getting that. Which direction do you think the months of inventory is heading in, right? Remember, as months of inventory goes up, prices come down. They generally have to get past a certain point. Can we get to that point? We're going to see. Now, the final months of inventory chart I want to draw your attention to is the Toronto condo space, right? So you can see over here, the Toronto condo space has double the months of inventory than the entire GTA market, meaning this is what's pulling the average up, which means that condos are selling twice as slow as other properties, right? So this is because a lot of investors are selling their condos right now because of the potential high rate hike renewals. And a lot of first-time home buyers are selling their condos to move up into a freehold space for more, bedrooms and kind of like raising a family. So as we run up into those two things with the mortgage renewals, I suspect we're going to see a lot of investors of that static variable. So these are your people at RBC, BMO, CIBC, and TD will come to the market, right? And I'll continue monitoring the Toronto condo space because, like I was saying earlier, it is the biggest potential pitfall for the market. But at the moment right now, it is holding steady for now, right? So now let's look kind of at the historic trends. Now in these charts, they're generally what I've been using, but I've modified it so that we show a 10-year average. And you can see the listing active count is still fairly low. And this is what I was saying. It's what's keeping our prices afloat right now and not dropping. And we're still well below the historic norms and even below the 10-year norm, which is exactly what we kind of saw in spring, why we have less inventory. Now for sales in March, you can see that, I was saying earlier, we have a 15-year low and well below the averages. In the last 10 years, you can see we've had like a lot of sales in March, and this is why I did the 10-year yellow line. In 2017, 2021, and 2022, it pulled the averages up, right? So that's why if you just look at this chart, it shows you exactly how soft the spring market is starting. Not many sales. Now, in most years, we see the sales generally in like March, 2x. That is what we see in normal January. Now, this year, January kind of started off with a bang. And right now, we're seeing a 50% increase on sales in January, which is about half of what we're expecting. So again, another reason why the spring market is a little bit soft. Now, when we look at new listings, they're, again, also below historic average and well below the 10-year average, which again is what is keeping our prices afloat and what's keeping this market afloat. And when we're looking at the months of inventory, we're well above the 10-year average, which is exactly why I'll say it's a very soft spring market. And if we get that inventory spike, it's going to get worse. But we're like just a smidgen below the historic norm, right? But relative to the last 10 year, not great. Now the sales to new listing ratio, it puts us right exactly at 50%, meaning on this metric alone, it is a very, very balanced market. And it should be higher in the sense that like 60% of the listings should be selling since it is, the start of spring market. But as you can see, it clearly isn't. Now that you've seen all these charts, do you see what I'm trying to watch out for? Like this start of the spring market is very soft, despite the market is holding firm because we have a very low amount of listings. But the demand is clearly not where they should be for spring. And I suspect this is because the economic data is not good and people are waiting for that rate hike. And I just wonder how much demand is on the side waiting for that first official rate hike before they pull the trigger and don't want to be front running it like they wanted to in the start of this year in January and February, because the amount of rate cuts keep changing with the economic data. The other question is how many sellers are waiting for that hopeful rate cut in the summer to list and hoping we see a price rebound. I don't think that's going to happen based on the data I've shown you. But what if we get that rate cut, but right before that we get an excess amount of inventory that needs to be absorbed, which means that prices aren't going to be going up like most sellers are thinking, right? And just how close are these rate cuts going to be followed by the official announcement of a recession because the economic data isn't looking great. So these are like the questions that are just like circling in my head currently, and I'm just looking at this and trying to advise my clients correctly. Right now, my biggest fear and why I suspect that we're going to be going into a buyer's market, albeit kind of like a very soft buyer's market, is that we're going to be getting more listings in the spring, especially that clunk of listings that disappeared at the end of 2023. And if these listings don't get absorbed, and the rate cuts aren't coming until, call it June at the earliest, or maybe even starting in July, which then we get hit by an official recession in like Q3. Yeah, I don't know if rate cuts are going to be bailing anybody out, right? And this is definitely where I think it could be going downhill, but just how bad, we don't know, right? We don't know how bad this recession could be if we're getting it, right? And that's the problem. So that's kind of like my worst case scenario, but I'm preparing everyone for that. And this is why I'm sharing this kind of slightly longer video with you to kind of share my thoughts and kind of like the trickle effect of what we're expecting. Hopefully this gives you some insight as to what is happening right now and where the data is pointing us to and why it's not looking the best. And while this may be a little bit more doomy and gloomy, this is just me and my spidey senses going off to share with you. So if you are a little bit concerned about, your move in the real estate market in 2024, after watching this video and seeing all the data I've shown you, you could book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.